It was just a week ago in our last video where we were detailing the imminent breakout of uranium. And in today's video, we're going to be talking about the current breakout of uranium because it's happened this week on a number of different instruments in the uranium space, including U.UN, SPUT, URNM, URA, the uranium metal itself, and much more. Before we get started though, nothing in this video is financial advice. I am not a financial advisor. Please do your own due diligence. It's your money, your responsibility. And with that said, let's go ahead and dive into our first piece of news here. This is Kazatomprom is expecting a 4 to 5 million U3O8 reduction in their 2023 guidance. They had originally planned on producing 22.5 to 23,000 tons of uranium. That's been drawn down or reduced to 20.5 to 21.5 tons of uranium. They say the reason behind this reduction in forecast is because of limited access to key materials and equipment impacting wellfield commissioning. So this is pretty big news. Kazatomprom is the biggest uranium producer in the world. And if they're having trouble meeting the demand of uranium that they're needing to push forward, what does that spell out for the rest of the space, the rest of the industry? Now, they do plan on increasing their production to 10% in 2024, but it says here the delays and cut to 2023 guidance puts that into question. This is a tweet from John Quakes on Twitter. If you don't follow John Quakes and you're a uranium investor, I don't know what you're doing. He is the one of the go-to guys when it comes to the uranium investing space. Highly recommend you follow him. Another person I highly recommend you follow is Cuppy. Handle is @Cuppy. He posted this really really good article in terms of how underfeeding versus overfeeding works in the uranium space, and likens it to what we're seeing today in terms of an orange juice factory, that is. He spells it out like this. So let's say you have an orange juice factory that contracts and works with farmers to produce 1,000 gallons of juice from each truckload of uranium. But in reality, the factory is very efficient and can produce 1,200 gallons with that truckload. So this nets us an extra 200 gallons just for pure profit. Now, this is what we call underfeeding in the uranium space. The same number of oranges go in, but more orange juice comes out than is expected, causing a glut of juice and reduced demand for oranges. So we have more supply coming into the market, driving down demand. And this is really how the uranium space has been acting for the better part of a decade now. And now let's say that the factory has an issue and is no longer very efficient. The farmers are still owed their 1,000 gallons. But the factory now only produces 600 gallons per truckload. Suddenly, the factory needs to scramble to find juice from somewhere else because they have an obligation to the farmers for 1,000 gallons. As a result, the factory buys additional oranges and juices them, leading to a shortage of oranges and higher prices of orange juice. This is what we call overfeeding. This is what we're seeing right now in the uranium space. Again, Kazatomprom, the biggest uranium producer in the world, has not been able to meet its 2023 guidance for uranium. This is what Cuppy here is describing as overfeeding. Now, let's look at something called SWU. SWU is the cost to enrich uranium. It's quoted as separative work units, SWU, or as we call it, SWU. So SWU goes up. It makes sense for the enrichers to extract fewer 235 isotopes from natural uranium and instead utilize more uranium. Not only are the enrichers no longer able to pocket approximately 20 million pounds annually for free, again, going back to our orange juice analogy, we had 200 oranges of excess oranges that we could profit off of. What we were seeing in the uranium is we had 20 million pounds that were produced annually for free, that they're no longer able to tell customers that they're no longer able to supply to customers and bring down demand. So they're now telling their customers that they need to procure far more uranium for the enrichment process. Estimates of the swing in total uranium demand are all over the place, but they tend to cluster to around 20 to 50 million pounds a year. It's insane. We have about 185 million pounds of demand currently on the market. So 20 to 50 million pounds, that's a significant chunk of that demand. And it's growing rapidly too, with all of these countries, especially even in Europe, beginning to reconsider their uranium, their nuclear power grid, their nuclear power plan. So this 20 to 50 million pound swing is going to break the market cup, he says, especially as it is rumored that some of the enrichers sold their production in the forward market and are effectively short uranium. And here's a chart of the SWU price over the last year. Just within a year, guys, we've gone from under $60 for SWU to $125, a doubling in price of SWU. So with that, that's just, I'm short of words here. I mean, the setup is just amazing. Like, we're beginning to see our breakouts here in the uranium space. Point of fact, URNM, the Uranium Miners ETF, and look at what we've done this week. We have this long-term resistance line built up since November of 2021, the highs of November 21, and what did we do? We had a breakout. We broke out here on Wednesday, retested the resistance line the next day on Thursday, and then boom, look at that big green candlestick, guys. That is a thing of beauty. So let me know in the comments, do you think we'll come back down and retest? There's no guarantee. We could come back down and retest, but I'm seeing a lot of strength here, a lot of strength. Look at all of these hammer patterns, these wicks all the way down. We're going down, but the buyers are not buying what the sellers are selling. Well, actually, they are buying what the sellers are selling, but they're not buying the narrative of the sellers. The buyers are gobbling up every single price reduction on these days. The price of URNM goes down, and boom, we have the buyers come back in and raise this price up. So really amazing stuff here. URA, the other uranium mining ETF. The reason why I kind of like URNM better than URNM is more of a pure play of the uranium space. URA has a bunch of other stuff in there that don't really correspond quite well to the uranium space. As far as since the last time I checked, I think it was about 70% pure uranium and then like 30% bunch of like other fluff and whatnot. But nonetheless, URA has been breaking out of this same resistance pattern for longer than URNM has. We're seeing that same breakout. The sell-offs are being bought. Look at these candlesticks here. Boom. It goes down for a bit. Boom. Buyers immediately buy it back up and bring this thing back into the green to close the day. U.UN, SPUT, the Sprott Uranium Physicals Trust, that too has broken out of this resistance line here, a clean breakout. We might come back down and test it. I don't know, but things are looking good. When you're starting to see URNM, URA, and SPUT all breaking out simultaneously, that's a tell. That's a tell in my opinion. Something is going on in the uranium space. Before we go though, here, check out this volume on the Sprott Uranium Trust front. We haven't had this much volume since about September 30th of 2022. Now we're starting to see movement as well in the physical uranium metal space. We had a big green day, almost a bullish engulfing for the week. This is a weekly candlestick of physical uranium, and we did close the week at $50.50. So we've broken out of this resistance line on the weeklies. The weeklies, when you see a breakout on the weeklies, that's a lot more significant than a breakout on the dailies. And the same rule applies for the monthlies versus the weeklies, but this is the weeklies. And this is another sign that we're breaking out of this downward trend, and we're going to either be following the support line or going much, much higher like we did here before. This was around October of 2021. We saw the same pattern, albeit a little bit more miniature, but we broke out of it and saw this big swing in the price of uranium all the way up to $65 or $64 or so. Another good indicator to look at is the URNM, the miners versus the uranium price itself. So the miners have been beaten down versus the metal, but in recent days, in recent weeks, we have broken out of this downward trend, this resistance line. And we closed out the week on Friday with a bullish engulfing. Here we see it. We opened the day lower and then closed the day higher than at any other point aside from these the wick here for the prior day. A bullish engulfing is a sign of more up days ahead. It means your probabilities are on the side of more movement to the upside. URA divided by the uranium price, we see the same thing as well. A similar breakout. After this long-term downtrend from May of 2021, we're breaking out. We saw this same pattern here. Boom, broke out of it. That's what led us to our big beginning. That's when we started to run back here in 2021, in the summer of 2021, with Sprott Uranium Trust being included into the mix and driving up the uranium price. We do have a lot of volume here, as you can tell. And even though with this recent breakout, we're still ways away from the 2011 highs of this ratio. So if we just simply retrace back to those highs, that is a 359% increase in the uranium metals the uranium miners price against the metal. So even if, let's say the uranium price sticks at around $50, the miners would have to increase by 4.5x just to retrace that old ratio of 2011. And that 2011 ratio wasn't the last high of uranium. The last uranium bull market topped out in 2007, but this is as far as URA goes. So, even this is a bit conservative on the uranium miners front. And then finally, let's close things out by looking at our industry leader, Cameco. And Cameco still hasn't broken out yet, but it has seen a lot of strong movement to the upside. Look at all of these green candlesticks here. A lot of strong movement. Look at these big candlesticks driving this thing all the way up. And then if you control for Cameco and control for the money supply added into the economy over time, Cameco is ridiculously cheap today. So this is Cameco divided by M2 money supply, and Cameco sitting here at a ratio of 1.3. And if we do a simple retracement back to the old highs of the last bull market for Cameco, you would see about a 6x, guys. 490% increase. That's a 6x. So I kind of want to re-look at this. When we don't control it for money supply, we may see, to the untrained eye, another doubling or so might seem, quite appetizing, but there's a lot more upside than meets the eye when it comes to Cameco and in the larger uranium space. So let me know what you think in the comments below. Do you think this is the real thing? This is the real breakout that we're seeing here in uranium? Or are we going to be retested back down, seeing another rug pull, and just continuing to drive ourselves crazy with this thesis? Let me know in the comments below. Thank you guys for watching. Give me a like, give me a subscribe. Really appreciate it. Helps get the message out. And with that said, I'll see you in the next video. Bye, y'all.